Nvidia just posted another monster quarter, and the stock is sitting around $177 with a market cap of $4.3 trillion. Analysts say the stock can almost double this year. And after digging into the numbers, yes, I'm still impressed, but I'm also watching something that most people aren't even talking about. Well, here's what I know. The company just reported $57 billion in quarterly revenue. They grew earnings more than 60% year over year and created almost $22 billion in free cash flow. Those are astronomical numbers by any measure. Now, I've read a lot about Nvidia and I've watched enough videos from my competitors. There's something that everyone just seems to be skipping right over. And I say it could decide whether Nvidia doubles from here or finally starts to slow down. And I'm going to show you exactly what it is. Now, if you're new to the channel, hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. As the premier GPU manufacturer, Nvidia has become the face of the AI revolution. In 1999, the company unveiled GeForce 256, the world's first ever graphics processing unit. Then, 7 years later, they pioneered the Compute Unified Defense Architecture, or CUDA. It's a parallel computing platform. And this technology literally transformed graphic cards into far more powerful general-purpose processors, and that allowed them to function alongside traditional CPUs in serious compute workloads. And the result? Well, NVIDIA's GPUs can handle simulations, crypto mining, rendering, and most importantly, artificial intelligence workloads. Basically, NVIDIA took graphics chips built for games and turned them into the engines that are powering modern AI and high-performance computing. Today, NVIDIA sits at the top of the AI chip world. Its latest Blackwell chips pack some massive performance into a single GPU platform and use tensor cores to speed up AI training and inference. They also include built-in protection through NVIDIA's confidential computing features to help keep sensitive data more secure, which really matters when you're training models on customer and enterprise data. So all in all, Blackwell is designed so companies can train and run giant AI models faster, cheaper, and with better data protection than all of the other generations. Now, let's talk about the stock. Right now, Nvidia trades around $180 with a market cap of around $4.4 trillion. Nvidia stock is up 32% year to date and about 31% over the last 52 weeks. That is a huge move for a company that's already worth trillions of dollars. So it raises an obvious question of how much fuel is left in this run. Now, stock prices give us a snapshot of where we are today, but they don't explain how we got there. For that, we need to look at the company's financials, which tell a completely different story. And this came up in my Discord recently, so let's dig into the numbers to see if the fundamentals actually justify this kind of valuation. Just recently, on November 19th, Nvidia reported third quarter financials for fiscal 2026. Revenue got to about $57 billion, up around 22% from the previous quarter, and around 62% up year over year. In other words, this is not slow, mature tech growth. This is hyper growth, quarter after quarter, year after year, for a company that's already one of the largest in the world. And net income for the quarter came in at nearly $32 billion, up 65% from a year ago. It just shows how powerful NVIDIA's profitability engine has become. But the real story here is the pace that all this is happening at. Earnings are accelerating as fast as AI spending surges. And a large portion of Nvidia's current momentum is directly tied to the massive and still growing demand for AI computing. However, that speed is a double-edged sword because if AI spend slows down even just a little bit, Nvidia's numbers are going to be hit much harder than a typical, more diversified business. This quarter alone, Nvidia produced about $24 billion in cash from operating activities. They spent about $9 billion for investing activities and almost $15 billion in financing. Free cash flow landed near $22 billion, up more than 30% from the same period last year at $16.8 billion. And free cash flow is just a real cash that's left over after the company pays its bills and invests to keep the business running. And Nvidia is growing that cash pile very quickly. The company keeps investing heavily in data centers and networking because the combination of rapid revenue growth, thick margins, and a conservative balance sheet is exactly what long-term investors like me hope for in a dominant platform company. And if that flywheel keeps spinning, long-term shareholders can benefit from both growth and financial strength instead of having to choose one or the other. But aside from its strong third quarter results, what are Nvidia's other catalysts to grow? Because earnings today are great, but future growth is what drives where the stock is going to go next. So the AI factory story is what's evolving into a steel and concrete powerhouse with massive orders. Nvidia announced new AI factories in collaboration with South Korea's Samsung and SK Group, which combine chip-making expertise with GPU supercomputers. The first phase of an SK-built facility is expected to feature more than 50,000 GPUs. And when customers invest substantial capital in multi-year projects, future demand appears less like a guess and more like a schedule. That matters because big locked-in projects can smooth out the revenue curve and give investors more confidence that today's demand isn't just a short-term spike. NVIDIA is also helping push public research as the U.S. Department of Energy and Oracle are building the largest AI supercomputer for science with a record, get this, 100,000 Blackwell GPUs. Well, when government and giant enterprises commit to gear at this scale, it usually just means they plan to keep using that platform for years, which can support NVIDIA's revenue even in tougher markets. And at the same time, we've got Lilly, or Eli Lilly to many. They're helping take healthcare from promise to production by deploying what it calls the world's largest AI factory for drug discovery, with more than 1,000 Blackwell Ultra GPUs inside of a DGX SuperPod. And this is just one real example of pharma that's spending serious money on AI infrastructure, not just talking about potential, which reinforces NVIDIA's role in high-value industries like drug development. NVIDIA also unveiled IGX Thor, which takes robotics to a new level on the industrial edge. And this tech brings real-time physical AI into factories, warehouses, and medical environments, while U.S. manufacturing and robotic leaders rally around simulation and Omniverse to design the next generation plants. More robots that see and decide in real time means more NVIDIA inside the production floor. So NVIDIA is not only selling chips to data centers today, it's also wiring up the physical world so more robots and machines think with NVIDIA hardware. And most recently, on November 18, NVIDIA strengthened its position in the AI landscape through a major partnership update with Microsoft and Anthropic. And in this deal, NVIDIA and Anthropic will co-design future hardware and optimize Claude models to run more efficiently on NVIDIA's Grace Blackwell and Vera Rubin systems. And this collaboration aims to boost performance, reduce total compute costs, and align future NVIDIA architectures with Anthropic's rapidly growing workloads, which could reinforce NVIDIA's role at the center of next-generation AI infrastructure. Together, these advancements just continue to push NVIDIA further into the future and deeper into success. But massive success doesn't mean that the road is smooth, right? Nvidia still has risks that investors need to watch closely. Let me give you an example. Company's recent commentary showed no shipments to China in the quarter. And this meant that Nvidia's Chinese market share had gone from 95% to zero. And this takes a major growth channel off the table and adds even more uncertainty to any hopes of a China comeback. If demand from China remains restricted or inconsistent, the company loses one of its biggest potential drivers, which can easily weigh on future revenue and slow momentum. Of course, high expectations also draw in aggressive sellers. Recent filings even show that Michael Burry is holding sizable put options. These are betting against the stock. When traders like Michael Burry buy puts, he's betting on the stock going down, or at least protecting against a drop, which tells you that not everyone believes this rally will continue in a straight line. Lastly, there's the overall fear that we're in a massive AI bubble. Some analysts are sounding the alarm. They're citing overstretched valuations, massive AI infrastructure spending, and circular, some might even say incestuous deals among the most prominent AI companies. And this will be difficult to navigate because if we are in a bubble, then we have no idea when it's going to burst. But if we're not, then you're probably leaving money on the table by staying away from AI stocks like Nvidia. This is the classic investor dilemma. Risk missing out on more upside or risk holding the bag if the hype unwinds. So that's it for the risks. With all that out of the way, is Nvidia stock a good buy as we get into December? Well, consider that a consensus among 48 analysts say a resounding yes. They rate the stock a strong buy and have a high target price of $352. It just suggests the stock could almost double from its most recent closing price. The average score is 4.83 and has gone up in the last 3 months. It's almost a perfect score. I think it's right. Nvidia is still the dominant force in AI. However, the risks surrounding the stock are becoming more meaningful as expectations rise. So even though the growth and profitability look incredible today, the margin for error is getting a little thinner, which is why position sizing and risk management matter so much with a name like this. But what about you? Where do you see Nvidia heading from here? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe because it helps others find the video, it supports the channel, and you won't miss out on my next deep dive. Well, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.